The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Stocks waver, Biden bristles, and corporate America gets set to show their cards. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
Welcome back.
Thank you.
Nice to see you.
Nice to see you too, Alex.
All right, let's get to the record here on the S&P, because guess what? There's another one on track for 35. Although, let's not be honest, let's not break out the popcorn here or anything like that. We're just flat on the day. But it's really tech, I know, a shocker that's leading everything higher as well. You got NVIDIA, you also got TSMC, and that's all leading the SOX index higher as well. At one point, the SOX also hit an intraday record. And like I mentioned, NVIDIA up strong, up by about 2%. What's not strong, Romaine, is Bitcoin. It's lower. Is it a barometer of risk on, risk off? We'll get to that later on in the show.
Yeah, the concern right now about risk on, risk off sentiment, something that this market is going to have to parse here on the first day of the week, kicking off with folks already looking to the week's end and the start of a new earnings season. Wall Street saying corporate America needs a blowout quarter for U.S. stocks to extend this rally, a tricky feat with earnings expectations at all-time highs.
Earnings estimates have been coming down on a quarterly basis. Like for the last 18 months, each quarter gets revised lower. They jump over the lowered bar. And that's exactly how we're set up for this quarter, again, which is that earnings have been coming down. They'll probably meet the expectations, beat them. And this is where I think we could start to see 25 estimates come down.
Mike Wilson there speaking a little bit earlier. Scott Rubner also out with a note, the chief tactical specialist over at Goldman, saying that with those high expectations now priced in, the bar for earnings is no longer a tailwind, and that really sets up the potential for a sell-off in early August, according to him, potential market outflows that could persist until after the U.S. election in November. And speaking of which, while the political situation starts to firm up over there in the U.K., over there in France, the outlook right here in the U.S., well, that's still in tatters. Joe Biden mounting a defense today against calls from his own party to drop out of the race. A bit more on that story in just a moment, but let's circle back to stocks and, more importantly, the start of the earnings season. Alex.
That's right. And sort of will be the Mag 7 or will it be the broader S&P that will take the reins?
Yeah.
That's the question. This is a fun chart that kind of shows that. Thank you, Bloomberg Intelligence. So this is earnings estimates for the Mag 7. This is earnings estimates for everything else except the Mag 7 for the S&P. And you can see here clearly for the second quarter, we're still looking at outperformance from the Mag 7. But then that kind of decreases somewhat while you wind up having Mag 7 increasing its power. So back in 2025, you could see nice size earnings growth from the S&P if you back out the big tech names. Romaine, the question I think becomes then, is that enough to see a big move into, say, the equal weighted index, the SPW, out of the broader S&P? Or are we just going to be in this churn where it's still going to be big tech, and is the bar just a little bit too high for them to meet? Yeah,
good question. And maybe big tech is enough for this market. We're going to pose that question to our first guest as we kick you off to the close here on this Monday afternoon. Andrew Slimmon, Senior Portfolio Manager and Head of Applied Equity Advisors over at Morgan Stanley Investment Management. And I am curious here, Andrew, about this whole issue of breadth. I mean, we make a big deal about it in the media, but is there a case to be made that, you know what, maybe it's not all that bad to have NVIDIA and chip stocks and software stocks leading the whole market?
I agree with you, Romaine. I mean, at the end of the day, if you look at the best, stock price momentum, it seems to be aligned with earnings revisions. In other words, the companies with the best revisions are doing the best, and the companies with the worst revisions are doing the worst, which means that what's driving stock prices is fundamentals, and the fundamentals are good. So when people say, well, it's crazy, the narrowness of the market, I say, whoa. These are the companies that have had the best earnings revisions. They're being rewarded the most. It's a very, very logical market. Now, having said all that, I don't agree at all that it's bad going into earnings season, because this lack of breadth recently means there are a lot of companies out there that have had very good fundamentals, but have actually not done much recently because everyone's so focused on AI. Mm-hmm. So I think the setup into second quarter earnings is really good because it's an opportunity. I'm not saying run out and sell your AI stocks,
right,
but look at companies that are fundamentally doing well that have kind of not done much recently.
But to your point there, Andrew, some of the concern heading into this earnings season as well is the idea that expectations are a lot more elevated than what they were maybe in the past. And that sets up the potential that if you do get misses, whether on the earnings themselves or the guidance, you could see a more severe reaction to the downside.
That's true for the tech stocks, because those are the ones that are most overbought going into earnings season. So what always scares me is when stocks are red hot and expectations are high. But for the most of the market, that hasn't been the case recently. Most sectors have really not done well. I'll give you a perfect example. The industrial stocks have really been hurt. A lot of the infrastructure stocks have really been hurt recently, and I don't see that going away. So I see that as a great setup. So I don't, again, the bar is higher in terms of recent performance. It's for, yes, the tech stocks, and maybe they meet and the stocks don't do well but for a lot of sectors, they haven't done particularly well recently.
So, Andrew, how much of that, though, is a value call? Because the value trades still just can't get legs.
Sure, I agree with that it's financials currently. Value stocks have done very poorly recently, but again, their fundamentals haven't really valued it. So I think, or validated it. So I do think your point, Alex, which is it does push us more as a core manager into the areas of value where we say, well, what stocks are doing well fundamentally that haven't done well recently? The setup seems to be good. So I think the banks going at, the end of this week, I think the setup is pretty good. I don't see negative revisions. I just don't see it. I can tell you that what matters is not this year's revisions. What matters is next year's revisions, because at the end of the year, we're going to price off next year's revisions. And if you look at FactSet or any Bloomberg or any data source, the bottoms-up revisions have gone up.
Yeah.
They're not going down. So I don't know where these people are coming up with those that revisions are heading lower.
Oh, well, I mean, I think for tech, heading lower, at least for the Mag 7, it's like from 24% to like 16. So they're not like a negative. But does that wind up implying, though, are we in borrowing growth from next year, though, if we continue to kind of grind out earnings, or no?
Without a doubt. You're absolutely right. The market is a forward predictor. And so it's predicting earnings strong this year. I think the market is going to have a much better year this year than it will next year, even though next year we might have better earnings. So the stock market looks ahead and it's saying, hey, we could make 280 of earnings next year, and we're going to price off on December 31st. We're going to price the next 12 months is going to be 2025. And could that be 280 or even north of 280? Well, you know what? That number keeps going up every week. So I think it's a real possibility.
Andrew, I do want to get your thoughts on a little bit more of a short-term outlook. There's been a lot of discussion here about the potential, malaise that might wash over this market, not only because of the seasonal issues that we normally have during the summer, but of course with the big election up ahead and a lot of folks who don't necessarily want to be in the middle of that. Is that a concern for you at all?
Well, I mean, I've been pretty vocal this year, saying, look, the stock market hates uncertainty. And because we have two candidates who have both been president, that's less uncertainty, and therefore I expect less volatility. Now, if that changes, and statistically we know that coming out of the conventions, if the challenger is ahead, markets struggle because the challenger, we don't know what we've got with the challenger, there's more uncertainty. But, I've all said, hey, it's not true this year because both have been president. If there's a change in either candidate, that will increase the uncertainty, and therefore I think that increases the volatility. So that is definitely a risk at a time when, the market's done pretty well. The flip side, and we're going to get a CPI print later this week, but the Fed, they're getting what they wanted, which is a lower inflation, economy slowing but not breaking. And if the Fed cuts, in September, I think the market, at least initially, is going to like that a lot. So yeah. I think there's some offsetting kind of bull bear arguments.
All right, great stuff, Andrew. Going to check back with you in a few weeks. Andrew Slimmon, Senior Portfolio Manager and Head of Applied Equity Advisors at Morgan Stanley Investment Management, kicking us off to the close here on this Monday afternoon. Up ahead, a big week for monetary policy. Bowman, Bostic, and several others are set to speak, including Jay Powell. 2 days of testimony on Capitol Hill. Some insight from Rob Sockin, Senior Global Economist over at Citi.
All right, plus we're talking Hollywood with the summer of sequels in full swing. We're going to talk to an analyst who raised his recommendation on movie theater operator Cinemark to buy from neutral.
And a volatile day for Boeing. We're now learning that the aircraft maker has agreed to plead guilty to criminal conspiracy in connection with those two fatal crashes of its 737 MAX jetliner. A full breakdown here of what that could mean for the company and the airlines going forward. All that and more coming up in a bit. This is The Close on Bloomberg.
Jumpstart your trading day with 2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg Television.
The bottom line here is that we're not going anywhere. I am not going anywhere. I wouldn't be running if I didn't absolutely believe that I am the best candidate to beat Donald Trump in 2024.
That was President Biden speaking this morning when he called in on MSNBC, just vowing to stay in the race, even as some prominent House Democrats have said privately they want him to step aside. But let's get the race here and the state of the race and the impact on the markets with Courtney Gelman, Managing Director of Policy Research at Strategas. All right, Courtney, did he do enough over the last few days? Can we put the issue aside yet?
So I think the bigger question is there anything that Democrats can do? And Biden is hoping, and his campaign is hoping, that there's really nothing that they can do to get him out, because most of the scenarios for Democrats to replace Biden as the nominee require Biden himself to take himself off of the ballot. So that's really what we're looking at right now. The Biden campaign, I think, is really hoping to just get through this week, hoping that the NATO attention, the attention to potential Gaza ceasefire, and the Republican convention starting next week will take some of the headlines off of kind of the candidacy and crisis narrative that has evolved over the last 10 days.
Courtney, then over the last 10 days, has your view on what happens in November then changed because of that debate and the aftermath?
So it has. So certainly, I mean, we've certainly seen the betting market odds and some of the polling indicate that voters have less faith in Biden being able to emerge victorious. Certainly, we've seen the polling favor not just President Trump, but also a Republican sweep. And we have seen equities start to move off of this. We won Republican portfolios and Democratic portfolios. We saw an immediate move after the debate on Friday where a Republican portfolio was outperforming by 175 basis points. That's come in a little bit, but we still see our Republican portfolio. So those equities that would benefit from a Republican sweep outperforming our Democratic portfolio by 48 basis points since the debate alone.
I am curious, Courtney, on the issue of a potential sweep here. Is there any sense here that we could actually see maybe a little bit more of a gap between what happens with the president and his race and what happens with those down ballot races? I know in the past that correlation has been pretty strong, but I'm curious as to whether there's enough of a breakdown there where the Democrats can at least count on winning something on those lower ballot races, even if for some reason the president doesn't work out for them.
Yes, that's a great question. That's something that we're considering, whether or not you could have voters splitting their tickets, especially off of concerns about having a check on power. So that's certainly something when we're talking about issues like abortion and other social issues where you could have voters down ballot wanting to split their ticket, especially at the Senate or House or even the local level. And then you also just have general concerns about Republicans potentially underperforming their polls. That's something that we've been worrying about this entire cycle, because you've seen President Trump outperforming in the polls, which is something that you didn't see in 2020 and 2016. So those are both factors that we're watching this time around. But it is something that we will be having to pay a lot of attention to, because if you start to see Democratic senators starting to underperform because Democratic senators have been doing so well in their races versus how Biden has been doing in those states. If they start to underperform, that's going to just increase pressure on President Biden to step aside.
But we'd be remiss in not just pointing out the obvious, which is that the clock is ticking here, Courtney. I mean, we're a month and a half from the Democratic convention, less than 4 months, I think, from the actual election itself. I mean, how much of a window do they have to even assess whether he's actually going to drag down some of those candidates?
They certainly don't have much of a window, especially because Democrats have long been pretty much of the view that they needed to nominate Biden ahead of the convention, so ahead of mid-August, because of concerns about Ohio's ballot deadline. They could be having a roll call vote on formally nominating Biden as early as mid to late July. And so the clock really is ticking in order to kind of have those considerations and replace Biden. But again, that has to most likely, in our view, be President Biden's decision whether or not he wants to step down from the ticket.
All right. Well, he's certainly out there trying to make the case for himself in a way that maybe we didn't see prior to that debate. Courtney Gelman, Managing Director of Policy Research over at Strategas. And it's kind of interesting, Alex. I mean, we talk about this idea of replacing him. And I sort of remember I started my career way back when, 30 years ago, when I was, of course, like 5 years old. Of course. I was covering sports. And I remember at the time they were going to replace, I think it was Heath Schuler on the Redskins, Washington football team. And my boss said to me, who are they going to replace him with? And I haven't seen a single poll that shows any of the other Democratic candidates would fare any better against Trump than Biden, including Kamala, including Gretchen Whitmer and some of the other names. So it's, I don't know, I wonder if this is just kind of an academic debate that's kind of for naught.
I mean, potentially.
Yeah.
It also just, I thought it was interesting about sort of splitting the ballot that way. Sort of maybe you go one way with your Senate and House picks versus the White House. Also, you can go and vote on like the amendments and stuff, like for your state or your city, rather than deal with the actual electorate. What's interesting, though, is that volatility in the curve for the VIX is down.
Yeah.
Like marginally, but down for the election ever since the debate. What's up with that?
Yeah,
That's really strange.
Yeah, absolutely. Something to keep an eye on here. We'll continue to cover that story. In the meantime, we go back to what's happening in the markets and a closer look at shares of Cinemark popping higher after an upgrade over at B. Riley. A conversation coming up with the analyst behind that call about why he is extremely positive about a box office recovery in 2025. This is The Close on Bloomberg. All right, time now for our top calls. A look at the big movers on the back of analyst recommendations. And we start off today with TSMC getting a vote of confidence over at Morgan Stanley. The price target going up by about 10%, with the firm citing expectations of AI chip demand sustainability and higher wafer pricing trends. They are expecting TSMC to raise its full year revenue growth guidance on the back of that AI demand. Shares there up here in the U.S. by about 3% here on the day. Next up, let's take a look at Brinker International. Of course, this is the company behind Chili's. Raymond James serving the restaurant operator with a downgrade. The analyst going from a strong buy to outperform, saying that the stock is still fair value, but it still sees further upside for the shares, specifically citing some of its own proprietary comp sales data over at Chili's. Nevertheless, those shares down about 1% on the day. And finally, let's take a look at the movie theater chain Cinemark, an upgrade at B. Riley, with the analyst saying that the movie theater operator actually can see some benefit from a big box office rebound in 2025. He boosts his price target to 27 from 16. The shares unchanged here on the day. Those are some of our top calls, but we want to stick with that last one here and get some insights into exactly what could drive that box office rebound. Eric Wold joining us right now, senior analyst over at B. Riley. All right, Eric, talk to us a little bit here. There's been a lot of talk about the slate of movies that we never got, I guess, last year. That seems to be replenishing itself here in 2024. I assume you expect that to continue next year.
No, we do. I think when the year started, it was well understood that the slate this year would be negatively impacted by the Hollywood strikes last year. We estimated this year's box office lost as much as $1 billion in revenues from films that were delayed either to later in the year or pushed into next year. I think we're past the brunt of the impact on this year's slate. Next year's, or the back half of this year, looks very strong and even better moving into next year. So we felt it was the right time to move off the sidelines and move back to a buy rating.
I'm curious as to, based on what we know, at least, or what you know, Eric, from your own research, about how these movies are going to be released. There was a lot of discussion about the business model, whether you take these straight to theater, keep them there for a month or two before releasing them on streaming, or whether you do something where that gap between releasing on the streaming services and releasing in the theater is a lot narrower.
Yeah, I think that was more of a question during the pandemic when studios needed a way to monetize their films. When theaters were closed, they really had no choice but to release them to streaming, and all of them were looking to build up their own streaming subscriber bases and wanted to give a reason for someone to sign up. Now that we're past that, now they're starting to see streaming subscriber numbers somewhat flatline around where they've been. Studios are once again realizing that the best way to monetize a big budget film is using theaters as the first release window. So I think that question has somewhat been answered. There's still a question in terms of how long that delay is from a theater release to the streaming platform. And while the window question got a lot of uncertainty years ago around that, I think we've basically realized that studios and theaters will work together and find the right number of days that make sense, both to maximize it in the theater and not leave auditoriums empty if a movie is underperforming.
Most important question is, did everyone get their Deadpool tickets? Because I finally ordered mine on Friday. I'm insanely excited. Talking about we like just the sequels, but like I'm pretty pumped about this one. I'm curious though, AMC, you still have a neutral rating. Is that an AMC specific issue because of get caught up in the meme hype? Or is there something specific about operationally AMC, for example?
Not so much operationally. They've got a debt situation they need to figure out. They obviously have an amount of debt that's coming up for maturity in 25 and 26. They've mentioned they're in discussions with their debt holders to push out some of those maturities out a couple of years. That would give them time to not only benefit from a box office recovery and more cash flow coming in, but hopefully interest rates coming down in a more favorable environment for refinance. So that's more of a balance sheet capital structure than any concerns around the operations or the industry.
So far, has the summer, quote unquote, whatever we're going to measure summer as, has it done as well as you thought or not as good or exceeded? What do you think?
It's coming a little bit below. I think April and May were tough. June was strong, really on the back of Inside Out 2. Despicable Me's done well, as you mentioned, Deadpool, Wolverine. So I think the back half of the year will do well. For us, the most important part is not the overall box office number, but looking below the surface at what consumers are doing. And we've continued to see post-pandemic consumers paying up for the premium screens, the IMAXs, the large formats. There hasn't been any degradation in what they're willing to spend on concessions and food and beverage. So they're willing to come to theaters when a movie's there. They're willing to spend when they're there. We just need more movies to come to the theaters to get them more often.
Hey, Eric, we really appreciate Eric Wold joining us, senior analyst over at B. Riley. You also know it helps me get into the movie theater when it's 95 degrees outside.
Yeah.
That will help.
Yeah, that used to be in the old days a big part of the appeal for some of these theaters here. It'd be interesting, too. One thing I forgot, I didn't get a chance to ask him, too, which I kind of forgot about, was there's apparently like another potential Hollywood strike looming. This is with all the behind-the-scenes people, the crafts people.
Right?
The crafts people and the folks over at IATSE here. And I know they kind of struck a tentative deal, but that's still unresolved. And I think July 31st is the deadline. So it'll be interesting to see if they can avoid another strike. And even if they do strike, how disruptive would it be?
And where's the impact? Like, we're on 2025, or is it like 2026 now that impacts?
Yeah, I would assume that would affect
later
movies that are being filmed now rather than the ones that are already in the can and being edited. But I don't know. Who knows?
Yeah. We will see. All right, coming up, it is a big week for monetary policy. I mean, what week isn't? Plus economic news. We're going to discuss with Robert Sockin, a senior global economist over at Citi. We're going to break down what to expect over the next 2 days from Jay Powell and look at that CPI on Thursday. This is The Close on Bloomberg.
Just about 3:30 p.m. here in a hot New York City. This is the countdown to the close. I'm Romaine Boston.
And I'm Alex Steele. Here was a fun thing today that I totally slipped by me. We got the New York Fed inflation expectations coming down for 1 year and 5 year. 3, they went up a little bit, but coming down. This feels like we're on the road, right?
Yeah, and I mean, that's been the narrative for a while now. I mean, even though we get these little blips that show expectations go up or the actual inflation numbers themselves go up, the disinflationary trend that started, almost a year and a half, something ago?
Happening.
That's still there.
It is still there. And it sets us up for a very big week for monetary policy and economic news, because tomorrow you got Fed Chair Jay Powell testifying before the Senate Banking Committee. Wednesday, the House Financial Services Committee. Thursday, you get the closely watched CPI and initial jobless claims. And Friday, more inflation data from the PPI and University of Michigan Sentiment Index, which is my personal favorite. So let's get into it with Robert Sockin, senior global economist over at Citi. Robert, if I said what's more important, Powell or the CPI data on Thursday, what do you say?
That's a great question. I think obviously both are important, but I think with Powell, usually in these testimonies, he tries to stick the company line a bit, not drift too much from where their communication has been in recent weeks. And so I'm not looking for anything earth-shattering there compared to recent comments from Fed officials. So I think it comes down to that inflation data later this week. But I wouldn't shy away from also saying that the jobless claims are important too, because I think we are seeing some signs that things are softening in the labor market, and that is one of the best real-time indicators of what's happening there. So I think all of them are really important.
Do you feel like the narrative is shifting from prices to growth? And is that a good thing? As in worried about growth rather than worried about inflation?
I think naturally, as we've made a lot of progress on inflation over the last several quarters, and growth is moderating, you start to see those risks be more balanced in terms of the conversation. For the Fed, early in the cycle, it was all about inflation. Now, as you said, it's about growth and inflation. Now, there's still risks on both sides. We're still seeing, even though we've gotten some better data in the U.S., still pretty sticky services inflation throughout this year. That's still a concern. But certainly, given the softening we've seen in a lot of labor market indicators, it's catching the Fed's attention. They have to watch that side more, too.
But we kind of knew we were going to get to this point. I mean, you talk about kind of that switch from just focus on inflation or growth and now having to look at both. But we kind of knew that equilibrium was going to be where the hardest part of this was. So it gets to the point now where Powell has to be much more communicative, or at least maybe a better communicator, maybe not more communicative, but better at communicating kind of what the Fed is going to do, or at least what its thinking is. And I think that's what's causing the market a little concern, is they don't seem to be getting that just yet.
Yeah, absolutely. I completely agree. And as you said, we always knew we'd get to this point, and the Fed hasn't necessarily done the best job of communicating how they're weighing both legs of those mandates and how concerned they are about the growth side of the mandate. You know, they are saying they're starting to see some softening. I think in the Fed's mind, they're still getting that soft landing that they were hoping for. But it's not clear, for example, as you said, if inflation continues to come in sticky and growth is slowing down, how they would respond. We think that they're going to cut in September. I think even if growth is resilient, there's enough progress on inflation to get that cut at that meeting. But after that, it becomes trickier.
So, Rob, I got to ask you, though, a little bit, about what's going on outside the U.S. as well. There's a lot of focus on the U.S. economy and its health, but Europe is going through a lot. I mean, we just had really two big elections, if you want to put the UK in that basket as well, that probably went in a different direction than maybe what some people thought, certainly in France. And I'm curious as to how you model that in terms of global growth, whether that ends up being additive to global growth or maybe potentially a headwind for it.
Yeah, absolutely. And as you said, we've seen a lot of surprising election results this year. In general, they've kind of been against expectations and against incumbents, or at least incumbents have come in weaker. Right now, in terms of the trajectory of this year, I think it's creating some uncertainty, especially in markets. But really, the underlying engines of growth in those economy aren't going to be too moved, I think, by what happens in these elections, at least in terms of the outlook for the next few quarters. I think beyond this year and in the coming years, how these elections shape up and what they mean for policies like migration flows, government spending, I think those shape the outlook very significantly beyond this year. But right now, I think the balance of mix is similar to the U.S. Is inflation going to come down, and is growth going to be resilient based on the domestic engines that we're seeing rather than policy?
But something that I think that treads through all of them, whether you're looking at the Labour Party or what happened in the French Parliament or here, is we're just going to spend more money. Like, governments will be spending more money, like whether you like it or not. Whether we get a President Trump or President Biden, like their policies might be different, but the spending is still there. I mean, is it just like a steepener no matter what then at this point? Like, are we in for just global spending from developed nations, full stop?
I think it's a great point. And as you said, I think that's the balance of risk. Now, there's some question marks somewhere. I think in France, there's more of a risk of a political gridlock, a little more uncertainty, but the balance of risk is certainly towards more spending. And in the U.S., I completely agree. I think we saw some people saying with market movements that Trump was going to be more inflationary than Biden. Maybe Trump was going to ride larger deficits. I think deficits are going to be large in the U.S., no matter if it's Trump, Biden, or someone else in the Democratic Party. I think that's the mode of operation that we're in. And really, for the U.S., until markets tell them that they can't spend more and you start to see a more significant term premium, I think that's going to continue for the foreseeable future.
What does that look like? Like, what level on the 10-year is that?
You know, we wrote this large fiscal report last year, and one of the bottom lines, at least for the U.S., is we don't know. Nobody really knows how much debt is too much debt. You know, the U.S. has a lot of special factors, largest economy in the world, reserve currency, but eventually you hit some point like that. We don't know where it is. It's probably not prudent to keep pushing up against that point. But for now, the market seems to be willing to absorb it.
Well, I am curious. It's funny you bring that up, too, because a little bit earlier we were talking about our folks who host the Odd Lots podcast, Joe Weisenthal, Tracy Alloway. They had a great sit down a little bit earlier with Warren Mosler, who's, of course, kind of the godfather of a modern monetary theory, something that has been thoroughly criticized by a lot of folks. But he's now even criticizing at least the contours of it, not necessarily the core of what it is, but the way it's been executed. And his fear is that we are at that point where the deficits and, more importantly, debt servicing has gotten a little bit too out of control. So even if he's concerned about it, shouldn't we all be?
Yeah, I completely agree. Yeah, absolutely. And as you said, and it's interesting, if you go back several years ago in the U.S., as you noted, modern monetary theory was really getting some tailwinds. Most of that has died off, but at least operationally, that seems to be, to some extent, what the government is operating along. They keep spending and spending, and the market keeps absorbing it. And just because it keeps absorbing it now doesn't mean we won't eventually run into problems. But another point that we raised in that report was politicians don't have much incentive to cut spending or cut deficits because the drag on growth is pretty large. So until markets tell them they can, and also look what happened in France. And those pension reforms were very unpopular.
That was about
there's a political cost
years?
to it.
Yeah,
absolutely. Yeah, like I said, you can imagine what happens here once they start to try to rejigger Social Security, Medicare, and all the other things a lot of folks depend on. All right, Rob, always a great conversation. Rob Sockin, senior global economist over at Citi. And one interesting thing about that, Alex, too, he talks about this idea that the market really has to kind of set the tone. It's like when they push back, then they'll finally do it. But do we really want to get to that point?
Just ask the pension guys over in the UK what happened under Liz Truss. Probably really bad for them.
Does anyone know where Liz Truss is? Is she okay?
Oh, I don't know. Okay. Maybe she's invested in UK bonds again or something.
Who knows?
I'm not really sure.
But that was definitely a hard lesson there, and the market pushing back on things. Meanwhile, the market actually pushing up. Shares of Corning. Shares up the most in about 2 years, one of the biggest gainers in the S&P on the day on the back of their earnings. It's our stock of the hour. We're having a discussion about it next. This is The Close on Bloomberg. All right, time now for our stock of the hour. Watching shares of Corning up more than 10% here on the day. Best day in more than 4 years. This after the glass and materials company released a strong earnings report earlier this morning, and we should say a preliminary earnings report that showed sales tracking ahead of analyst estimates. Abigail Doolittle joining us right now to talk a little bit more about that. A projection of about $3.6 billion in sales for the most recent quarter here. That's above what the street was looking for here. Still, that's a pretty big share reaction off of what is effectively like a couple of data points on the beat.
It's a huge share reaction. As you mentioned, the best day since 2020 at 1.2013. And it's essentially a bullish pre-announcement to the upside. And it's not just that guide higher for the current quarter and that pre-announce. It's also a lot of other nuances, including the fact in the first quarter, they're saying that's the low point. In other words, there's going to be growth from here on out. Now, relative to this quarter, where they're now saying that sales will be $3.6 billion, or I should say the second quarter, the quarter that was, as you mentioned, instead of $3.4 billion, that's 20% growth. That's really pretty impressive. They're also saying that in terms of the earnings range, 42 cents to 46 cents, they're going to be at the high end. Now, wait for it. They are saying it reflects an AI bump. Of course, it's the AI. Yes, AI bump. There's some piece of that. Apparently, their new optical connectivity products for generative AI doing very well. But they're also talking about it's reinforcing this recent quarter and the fact that the first quarter is expected to be the low mark. Their springboard plan to generate bigger sales, $3 billion worth of sales annualized over the next 3 years, is on track. And you really can't fault them. Investors liking this for a stock that on the one hand is up a lot from its lows, but on the other hand still has not achieved its all-time high.
Interesting that you had that chart comparing it to some of its peers, because BI's Woo Jin Ho was talking about the stock before the pre-announcement, saying that he saw a hockey puck-like recovery. Hockey stick? Hockey puck? The one that goes like this, whatever that is.
Hockey stick.
It's not just the AI frenzy, but it's telecos. It's also the investment in broadband that U.S. companies are making. Are you not seeing this kind of move in its comparative tech stocks?
That goes a little bit outside of my expertise, I would say. But what we do know here is that this is a company that's been around for a very long time. I think that as an old school glass company in terms of TV screens, also the optical fiber, obviously, and then the cell phones. And now they're talking about this new bump from AI to bring this growth. So I just think that there's hope that the worst is behind them, that they can really generate this kind of growth. Valuation could be more attractive if they do get more earnings into the picture. On the year, up 37%. So, really pretty strong there.
And this is a company that's been around, of course. I mean,
forever.
In the Dow for years. It was actually owned by Dow, the other Dow, for years. And then, of course, we talk about the whole tech boom and the whole fiber optic cables, and they were a big part of I guess those are made of glass.
Glass, yeah.
But how does the AI thing play into that, though? That's the part I didn't quite understand.
I wish I understood the technology. I wish I understood. I've actually thought about taking an AI training class just to understand it better, so that rather than just saying, they do actually. I know some people. Are they led
by humans or by robots?
Humans online. So a little bit of a mixture between technology and humans.
I feel like if you're going to take an AI class, shouldn't it be led by a machine?
Yeah, I don't know.
I don't know about that.
I think it's just the fiber that connects the stuff to AI. I think that's what that, in essence, winds up becoming.
That could be the technology. I should have looked into that a little bit more, but there's just the idea that the generative AI is a piece for them.
All right, Abigail. Thank you so much, Abigail Doolittle, joining us there. But, aside from the actual fundamentals there, are we still in the world where you mention AI and the stock goes up?
Apparently. I mean, it's up 12%. And like I said, nobody can seem to explain what exactly the AI strategy is. They know it. They said it. Whether you think that's worth a 12% bump, I guess we're going to find out over the next few days, weeks, and months.
All right. Wu Jin Ho does. BI. Check it out. All right, coming up, we're going to count you down to the closing bells. Will Tamplin is senior analyst over at Fairlead Strategies. We're going to break it down for you. This is The Close on Bloomberg.
I don't agree at all that it's bad going into earnings season, because this lack of breadth recently means there are a lot of companies out there that have had very good fundamentals, but have actually not done much recently because everyone's so focused on AI. Mm-hmm. So I think the setup into second quarter earnings is really good.
That was Andrew Slimmon over at Morgan Stanley Investment Management. He kicked us off to the close, just about an hour to go, Alex. It's kind of interesting, too. I thought that was actually one of the most important points that he made. During that interview, this idea here that we're so focused on whether those Mag 7 stocks are overvalued, we're kind of forgetting that some of those other stocks outside of those 7 are actually undervalued on a relative basis.
Yeah, but then that's a value trade, and the value trade hasn't worked. So
it hasn't worked, yeah.
But you know, with that?
But I get his point, though. His idea is that if you are looking for something other than those stocks, there are a lot out there. Sure. And the idea that this is a market that is, to a certain extent, still being driven, or at least being driven much more by fundamentals than maybe just a few months ago when it was all technical driven. And at least in his view, he thinks that's a good idea.
Well, it's good enough for 35 record highs on the S&P. We're getting there. We're going to hit it. It's going to happen.
We're getting there right now. The S&P. Right now the S&P relatively unchanged on the day. A little bit more of a pop in the Nasdaq, up about 0.2%. The Russell 2000 having a good day as well, up 0.6%. And there's your chip trade there with Nvidia, of course, leading the charge.
Yeah, at one point the SOX index was at a record high as well. I just wanted to point out, though, Nike getting hit. It's at the lowest level that we've seen since 2020. So if you do suffer, you can suffer a lot, and it'd be interesting to see how that scenario kind of plays out as earnings season.
Is there not an AI trade in the sneaker business?
If there was one, it'd probably be up 3%, wouldn't it?
Well, they should come out with something. I mean, you don't really need a
AI sneakers
pattern. You just got to say you have one. All right, let's get right to it here and talk a little bit more about what's moving the markets right now. Will Tamplin joining us. He's a senior analyst over at Fairlead Strategies, much more of a technician than fundamentals. And Andrew Slimmon was sort of all in on the fundamentals, saying he thinks that is supportive of valuations. When you look at the technicals, though, particularly some of the more high-level ones, RSIs, which are now, at least for the S&P and NASDAQ, in overbought territory, as well as some of the other metrics here, is there something there that gives you confidence that we could continue to see momentum to the upside?
Yes, certainly. Well, thank you first for having me on. Last Friday, actually, the S&P 500 broke out from what we call a flag pattern, which is essentially just a short-term consolidation phase that interrupts the uptrend. And we typically see that as a healthy development, and we broke out from that, and it just shows that we have renewed short-term momentum behind the market. And with that breakout, you can actually get some pretty impressive price projections. So in the S&P 500, 57, 55, looking out to the end of the summer. So generally, short-term, the market looks constructive.
When you look at all these conversations that have been had about breadth, or rather the lack thereof, from a technical perspective, does that really matter?
We would love to see the breadth improve. The divergence in breadth isn't a huge issue for us because these trends can persist for quite a long time. It's something we certainly have in the back of our mind, but the market has certainly been narrowly led. It makes for a more challenging tape to take advantage of, because when you have narrow leadership, that just means that you have fewer stocks that can give you outperformance on the upside. But certainly we've seen this mega cap trade work well, and we've seen, Nvidia off its highs, but at the same time you have Apple, Tesla, Amazon, and Meta all, broke out actually last week. So, there's actually some positive momentum in the mega cap still outside of Nvidia. But certainly, at some point we would like to see that breadth improved for the sustainability of the long-term trend.
Yeah, Meta hit an intraday record high at one point. Apple at another record, to your point. So it does bring the question, the pain trade. So Scott Rubner over at Goldman Sachs wrote a note today talking about the pain trade has shifted from the upside to the downside. The buyers are full and running out of ammo after the best trading days of the year are now behind us. Would you agree with that from a technical perspective?
That the best days are behind us?
And the pain trade is now not to the upside, but the downside now?
I wouldn't agree with that. For the rest of the year, our outlook is constructive. We think the market will end the year higher. At the same time, though, we do think there's going to be increased volatility, more than the first half, which isn't saying too much. But that's due to a loss of long-term downside momentum in the VIX, which we follow. So a little more volatility, a little bumpier along the way.
Is the VIX still reliable, though? You say you follow it, but you define it.
Yes, we do. We follow it.
Reliable indicator.
Yeah, we feel like it's still reliable as a transactional gauge of sentiment. So we like it, rather than the polling data. We like having that transactional gauge as well.
Oh, what is breaking out right now? You mentioned Apple, Meta, Microsoft, etc. What else is breaking out that we might not be paying attention to?
Yeah, sure. Not necessarily breakouts, but there are other areas of the market because. You don't have a widespread overbought condition because the breadth has been so bad. You have areas that are oversold. For example, energy. They've been in an extended corrective phase, but they've kind of started to find their footing a little bit near support. A lot of energy stocks have. We actually think crude oil looks poised for a breakout. It has resistance near 85 from a trend line that we think it looks poised to break. So energy is an area, and then metals as well. Copper above its 50-day moving average and a rebound. And then I would say software. So, the semis were really doing well within tech. Then software kind of came in. We've seen an intermediate term momentum shift in relative terms and in absolute terms there in software.
Something we haven't talked about yet really is what's happening with Bitcoin. Why? What's a level to look at in terms of some nice support? And kind of what's going on there? Is it an indicator of something when you look at it?
Yeah, we were really paying attention to 60,000. That was the level, and it took that out. And the 50-day moving average is right there as well, around 59. So it did take out some key support. We do think there's some downside risk for Bitcoin in the near term. And the next level is not until 51,500. That's where we think, if we got closer to that level, oversold conditions would come into place, and I think we would maybe be able to find our footing with Bitcoin. But it is in a long-term trend, so reviewing that short-term weakness within that bullish long-term context there.
Great stuff, Will. I heard you went to the University of Richmond.
I did.
Why is their mascot a spider? Can you explain that to me?
I think it's something to do with, I don't quote me on this, but I think they had a really good pitcher, and he looked like a spider when he pitched or something like that.
Really?
I think it's something to do with that, but don't quote me on that.
Okay.
I wonder how you look like a spider.
I believe it. It sounds like a good story. So I always just wondered. That's a weird mascot to have for a school. Anyway, the pride of the University of Richmond, Will Tamplin there, senior analyst over at Fairlead Strategies, helping us count you down to those closing bells. Less than 3 minutes to go here. Stock's pretty much where they were. Well, the last time we did that market check here, but kind of an interesting setup because you do kind of wonder with earnings season started, a big CPI report coming, and then of course we got another Fed meeting at some point later this month here, whether this is kind of that sweet spot where people are really going to have to make that trade one way or the other.
Or are you just going to stay out for a while and see what happens?
How long are you staying out though? I feel like people have been staying out for a while. At some point it's like you just, you're like nothing.
Sit in your money market for 5%. Deal with the volatility. I don't know.
I do love my money markets, Alex. Every time I check my account, and I think no risk, and I'm just, it's beautiful.
I'm
all right, we are moving closer to these closing bells. Stick with us. Full market coverage, as we do every day, coming up right now on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele to help take you through the closing bell. It's our global simulcast beginning right now with Scarlett Fu in the TV studio, Tim Stenovic in the radio booth, and a beautiful Carol Masser joining him alongside. I know.
Did you guys bond?
I know, we bonded. Don't worry, I'll be mad at her by tomorrow. We welcome our audiences across all of our Bloomberg platforms, radio, television, and our partnership with YouTube. Carol.
All right, having said that, I'm just, agog. I've lost for words. Semiconductors really outperforming in today's session. Take a look at the Philadelphia Semiconductor Index. There's 30 names, 29 are higher in today's session. I'm going to get into it a little bit later on in my gainers, but you do have some analysts out with some calls about one name in particular and kind of the group overall, or some of the other names in the group.
The S&P 500, it's in the green now. It's pretty much just flat on the day, and it kind of masks some bigger moves that we're seeing if you peel back the hood. We're seeing sort of outsized share move higher from NVIDIA, up 1.8%. Meta Platforms is down 2%. ServiceNow down 5%. So even though the index is flat, we're seeing actually some big moves within some of the stocks in there.
It doesn't matter if it's flat or just up slightly. Any positive mark next to the S&P 500 would make it the 35th closing record for this year.
I do have to point out, though, that what's interesting is that the semis are getting a nice boost. You get the stocks up. They hit an intraday record at one point. NVIDIA's up. It had an upgrade. TSMC hit $1 trillion in market value. Like, that stuff is really kind of moving higher, in addition to Apple, yet another record high.
Yeah, absolutely. And it gets to the point, too, here as to whether you do have investors out there really, truly searching for something other than chip stocks, software stocks, and I guess basically everything that has sort of made this market what it is since those lows back in October. For right now, you're not really finding much else out there. That is the trade, and you see that reflected on your screen today, although the moves are modest indeed. The Dow Jones Industrial Average down about 0.1%. The S&P 500 up about 0.1%, 72.85 and change right now. The NASDAQ composite up about 51 points or 0.3%. And you did get some outperformance out of the small caps today, with the S&P 400 up about 0.3% and the Russell 2000 up 0.6.
All right, back to the big caps I go, the S&P 500. And folks, you've got 278 names to the upside, gaining some ground today, 222 losing ground. And Scarlett, you've got 3 unchanged.
Yeah, and it's a very mixed picture when you look at the sector performances. Let's go to the IMAP right now for the S&P 500. You've got 11 sectors, and the biggest, most heaviest weighted sector that is leading the gains is tech, that is led by Corning, and materials and REITs also modestly higher. On the downside, communication services, and this is really paramount, dragging that group down by more than 1%. Energy and consumer staples also finishing down slightly.
Yeah, definitely a mixture of red and green there. All right, let's get to some of the individual gainers. The number one gainer in the NASDAQ 100 today, folks, Intel. It's the number 3 gainer in the S&P 500. This one finishing up more than 6% today, on track. This is a 4th straight positive session for the name. It's up more than 8% over that 4 days of trading. Milius Research saying we are believers in a catch-up trade for some in semis, hardware, and even software, those with lower expectations, adding that AMD, Intel, Apple, and IBM could all benefit from such a trade. So you definitely had Intel benefiting in today's trade. NVIDIA also up just shy of 2% off its highs of the day. UBS raising its price target on the company to $150 a share from $120, maintaining its buy rating. The stock closing at $128.23. So certainly has some room to run with that $150 price target. Another gainer in today's session had to do with some deal activity. You're talking about Morphic Holding. Ticker is MORF, not a name we talk about a lot, up 75% in today's session.
That's a great ticker, by the way.
It is Morph. It is a great ticker. Eli Lilly agreeing to buy it. It's about a $2.8 billion market cap biotech firm, U.S. gut drug maker. Lilly buying it for $3.2 billion. So some of the money it's been making on some of its obesity blockbuster Zepbound, plowing into something to maybe build out its pipeline. And one more for you, Corning, GLW, number 1 gainer in the S&P 500, up almost 12% today. We're getting into earnings season. This company coming out and saying that it reported some preliminary core sales for the second quarter of about $3.6 billion, guys, and that's ahead of the estimate of $3.41 billion. So that's a look at some gainers today.
Okay, you got the gainers. I got the decliners. I do want to start with one of the worst performers on a points basis in the S&P 500. That would be ServiceNow. Shares falling the most since May 30th, falling 5% today. This after Guggenheim cut its rating to sell from neutral. The price target has been set to $640. It implies a 21% decrease from the close yesterday. Guggenheim says that the software company's valuation does not match its future risks. And let's talk Paramount Global, because a deal finally done. Shares, though, falling more than 5% after the media company agreed to merge with Skydance Media. The deal hands the control of the studio to producer David Ellison. Finally an end, at least we think, to one of the industry's most dramatic acquisitions. We talked to Chris Palmieri about this a little earlier. He said that one concerns investors may have is what exactly is going to be different now? You know, it still has struggling assets, including those legacy linear TV. They're still trying to figure out what to do with streaming. The team out in LA did speak with David Ellison. He said that two assets he loves include CBS and Paramount Studios. So those are probably not going anywhere, but the question remains what happens to those other assets. And then another stock down more than 5% today, CMG, Chipotle Mexican Grill. No fundamental news, but shares fell more than 5%. The 50-for-1 stock split took effect back on June 26th. Shares have slid about 9.6% since then. We should note that restaurants with positive foot traffic that have shown positive comps so far this year, like Chipotle and Wingstop, have performed exceedingly well, while the rest have struggled. This is according to Jim Solera over at Stephens.
It's nice to have the whole team back, guys. This feels like, real close. All
together.
Right, let's get to the bond market. Nothing happens. You're seeing yields a little bit up in the front end, down in the back end. You had that New York Fed inflation expectations numbers that came out, if you guys saw. So the 1 and the 5-year moved a bit lower. The 3-year moved a bit higher, but they're all kind of in the range at 3 or below. So that's something. But let's be honest, bond market's not going to move until at least maybe Powell, at least CPI.
All right, so there's a lot going on this week. Yep, we could be talking earnings, we could be talking the economic reports, we could be talking Powell, but we're a little obsessed with a date that's, 11 years from now, 2035. Mark your calendars, guys, because
we'll all
it seems
be here,
like...
Okay?
I will definitely be here.
Yeah.
Well, anyway, that's when that final big Gateway Rail project between New York and New Jersey, it seems like it will get done because they got another big chunk of money, Tim, right, from the government.
Okay, they locked in $6.9 billion in federal funding. Securing the funding brings the total federal share of the project's cost to more than 70%, with its portion nearing $12 billion. That's according to the Port Authority released today. Guys, there's one tunnel right now that holds one train going one way between New York and New Jersey.
We wonder why there's problems.
And when it rains, everything stops.
Yeah, forget snow. So does this mean that that there won't be 90-minute delays anymore on the PATH train? Is this the point?
Well,
that's the idea.
I guess it's the New Jersey Transit train and Amtrak. That's what the.
It's got to get better, right? It's got to get better. Another tunnel, and they're going to do some upgrades on the other stuff too.
And that would, Carol.
Well, you said 2038, but I mean, we got to add another couple years.
I think our grandchildren will definitely enjoy that whenever it actually finally does open, or great grandchildren maybe. Another story
I'll be teleporting by then, but anyway, go ahead.
Maybe potentially. Speaking of which, I was an interesting story going on with regards to Apple and Android phones. I don't know how many of you have Androids here, but if you work for Microsoft, at least if you work for Microsoft in China, you're not going to be allowed to bring that Android into their facilities anymore. They're basically saying because of security issues, they're saying employees can only have iPhones inside the venue.
So if you're a Chinese consumer, you can tell whether you work for the government or whether you work for Microsoft based on what phone you're carrying at this point.
I thought that was interesting too. Why are they splitting that up? What does the government know that Microsoft doesn't? Or what does Microsoft know that the government doesn't?
Well, the government just doesn't want people to use the Apple iPhones, period. And Microsoft is doing this for security reasons.
Talk about frenemies, though, right? Microsoft and Apple. These two companies, for years, have competed against one another. And now one company is saying, you must use our competitors' phones in order to, be in our office in China. It's pretty amazing, the shift in the shift in these two companies that we've seen.
It also highlights the other issue, too, is that there's, for the most part, at least in terms of operating systems, there's really only two out there, right?
Right.
I mean, I know there's something else I'm probably forgetting, like BlackBerry or something like that. But I mean, this is it, right? I mean, you have one of two options.
Yeah.
Can the government then go back and say, Microsoft, no, we only want these phones? Or it's just you have to be a government employee in theory?
That to me is the bigger question, right? The involvement maybe of the government in all of this?
You're right. Are they going to Bigfoot and come in and say, no, you can't do that? That doesn't work for us at all.
Or maybe no phones at all.
Oh, man.
Well, that's the teleporting, going back to something else. Maybe it's like a different teleportation thing that you just like osmosis things and it goes to someone else's brain.
Or you just work from home and you don't use a device.
Or that.
No phones at all. It's like, it's a high school class that doesn't allow phones.
Watch yourself, Scarlett.
I know.
Teleporting work from home.
Scarlett, could you come with me, please? You're gonna get a little... No, I'm just kidding. All right, guys, that's a wrap. Our Monday cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. It's great to be back with the gang. All right, we will see you all. Well,
we'll see you Friday.
We'll see them on Wednesday.
No,
we won't.
I think Friday.
Oh, is it Friday?
Well, you guys are traveling, right?
Yeah, we're traveling.
All right, sorry about that. So we'll see you on Friday.
Good luck in your travels.
Bye. Bye.
All right, a lot more coming up here on Bloomberg Television. A wild day for Boeing shares. They opened higher, surged as much as 4%, dropped as much as 1%, before closing out the day slightly elevated. We did learn that they are ready to plead guilty to those fraud allegations. We're going to talk about what Boeing is doing, the impact on the company, as well as the companies that it supplies. This is The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. Scarlett, you wanted record highs?
We got them.
You got them. They weren't a whole lot to look at here, but nevertheless, a record high remains a record high on the S&P, the NASDAQ, and more importantly here on the Philadelphia Semiconductor Index. Of course, that has been a big driver of market gains ever since those October lows, and they continue to be as we start to head into earnings season. Keep an eye on Bitcoin, a big leg down here on the day. A lot of concerns about new supply coming back into the market, largely the release here of some of those coins that were being held as a result of that Mt. Gox investigation that goes way back when to about 8 or 9 years ago. As far as the other sectors go, you saw it as kind of a yin-yang here, with some of the tech sectors moving higher here on the day, Scarlett, but some of the more industrial sectors, particularly those in the real economy space, if you will, not faring so well.
Yeah, let's talk about energy stocks because they were lower as a group. And a big part of that is because ExxonMobil came out and said that it expects refining profits to drop due to lower margins across the industry. So analysts took a look at that and said that the refining hit means that the implied earnings per share overall look a little bit lighter than what analysts are expecting. So that stock down about 1% on the day, also dragging down Chevron as well. In the healthcare space, we're looking at Eli Lilly and more specifically Morphic Holdings, which will soon be owned by Eli Lilly, surging. That stock climbing 75%. The ticker is MORF after Lilly agreed to buy the company, which specializes in gut drugs. The price tag was $3.2 billion. That works out to $57 a share in cash, which is a 79 premium to the last close in Morphic before the deal was announced. Our top story this hour, Democratic donors seeking change are left feeling powerless after President Biden made clear that he is staying in the 2024 race. Biden told MSNBC this morning that he doesn't care what the millionaires think and that he dares anyone who doesn't believe in his campaign to challenge him at the DNC in 6 weeks. The House Democratic caucus is especially on edge, worried about their prospects down ballot. 9 members have already called for Biden to step aside, with more potentially joining them after the caucus meets tomorrow. Romaine?
All right, we do want to go to another big story of the day, and that involves Boeing. Its shares were all over the place today. This after we learned that the aircraft maker was going to agree to plead guilty to criminal conspiracy here in the U.S. This is in connection with 2 fatal crashes of its 737 MAX jetliner. Now, the deal would help Boeing avoid a potentially bruising courtroom confrontation. In the meantime, the FAA has ordered inspections of oxygen generators on thousands of 737 jets. Boeing in focus here. Right now, we have Tony Bancroft joining us here on set. He's portfolio manager and aerospace and defense analyst at the Gabelli Funds. And I should just point out here for you, Tony, and our viewers we are getting breaking news crossing the wire right now that the Defense Department is issuing a statement on that Boeing plea deal. We're going to try to get you some more details on that, and we'll bring it to you as soon as we get them here. But let's just start off with what we know, which is that they've agreed to at least try to wrap this up before it gets more into the public domain than what it is. Is this a good thing for them to just settle this and move on?
I think so. I think this is one of the key steps that Boeing needs to take in order to get the uncertainty out of the Boeing thesis. And, getting this wrapped up and, moving on to finding a CEO, increasing the ramp rate on the 737 MAX will, I think, get Boeing in the right direction.
Just again, some more headlines on this coming out of the Defense Department here in the U.S. The DoD saying that they are going to assess Boeing's remediation plans. Again, this is kind of a slow-moving drip story right now, but it gets to this idea here that maybe we're kind of on the other half of this. We already know the CEO is going to depart as soon as they can find his replacement. And with the settlement of this, is that going to give enough clarity to the airlines and, for that matter, Boeing suppliers that we can maybe start to see some normalcy soon in those relationships?
I think this is definitely a good move. It was a needed step, but really seeing the ramp in the 737 MAX above the cap of 38 a month is going to be the next key step in the story. Mm-hmm. And, that's just going to take time. They're going to have to get through a lot of QA with the FAA. And the FAA in the end game is going to have to authorize the 38 a month ramp above. And until then, I think, Boeing's just going to be working hard, blocking and tackling, and trying to increase their quality and safety in the manufacturing process.
What about government contracts? Because that's something that Boeing is in discussions with the DoD over. And I understand that we're not going to get an answer on this right away, but what are some of the concerns and what are some of the issues that they need to resolve?
Well, I think, first of all, we got to frame it. Boeing won over $20 billion of defense contracts last year. They do about $30+ billion in defense revenue. They're a top 5 defense supplier globally. And in this, global, the global tensions going on right now, I think, I don't think this is the time to be mandating that a large contractor like Boeing not be able to bid on contracts, especially they're on so many key programs in the defense and globally.
Okay.
And not a lot of alternatives.
And there's not a lot of alternatives. I mean,
and that goes for airlines as well. There's not a lot of alternatives, right? I mean, you have Airbus, which still reuses Spirit Aerosystems as a supplier.
So right now it does. They've made an agreement. They came to an agreement last week when they announced the acquisition to essentially sell them, even though it was Spirit's actually going to be paying Airbus to take those assets, but to shed those assets in order to make the acquisition happen.
Tony, I want to talk a little bit about just air travel overall. There was a lot of talk coming into this year that the airlines were still healthy, not just healthy, but just really raking in the cash as we were all traveling and they were able to charge whatever they wanted to charge. But the last earnings season, we heard some commentary, I believe, both out of United and American. I think there were a couple other airlines as well, including Southwest, that kind of said that things this summer probably aren't going to be as strong as first thought.
Well, I think it's always the law of large numbers. Demand, by the way, is still increasing. I mean, if you look at the IATA put out May, RPKs, revenue passenger kilometers, they were up, over 10% year over year. Load factors, which is essentially the utilization of the aircraft, was up, almost 2% on a year-over-year basis. So there's no question that demand is still high. It just might not be as high as it was last year or the year before, but the rate is still increasing. And I haven't been on a plane since COVID that's not fully packed. I don't know if your experience.
Same thing.
I think demand is fully there. Mm-hmm. Obviously, you can't. Pricing can only go to a certain limit, and they're being more cost efficient. You have more increased load factors. You have better efficiencies on the planes.
Do you think those airlines, though, they'll still have that pricing power? They'll be able to hold the line on some of those fares, or do you think we're going to see maybe some tinge of discount?
Again, I think probably the rate of increases are probably going to be slowing. They're probably not going to be what they were post-COVID, and the increases from that. But I think all things being equal, the airlines are going to still continue to move a lot of passengers around the globe.
So there's a lot of demand clearly for airlines and for just flying in general. But in terms of how the airlines respond to all of this and stay efficient, we know that JetBlue was not allowed to acquire Spirit Airways. We know that consumers have sued to block the Alaska Air Hawaiian Airlines merger. How does that all play out? Because it's a big mess right now.
Yeah, I mean, as far as the airlines go, I'm sure they'll work out what they need to work out. But as it relates to Boeing and the commercial aerospace and defense industry, I think the thesis for demand for commercial travel and new aircraft, the 40,000 planes that need to be built over the next 20 years, the $400 billion plus of backlog Boeing has, the almost decade long of production that both OEMs have, that remains intact, and I think that's going to continue. The experiential generation, people want to go travel, see the world, visit these exotic places and take pictures, and And I think that's going to continue as we go forward.
All right, Tony, great stuff. Tony Bancroft is portfolio manager and aerospace and defense analyst over at Gabelli Funds. A closer look at shares of Boeing, which went on a pretty wild ride today, only to end higher by about 0.5%. We want to stay in the air travel space right now, particularly on the heels of Hurricane Beryl making landfall here in the U.S. Power outages topping 2 million and at least 1,000 flights canceled coming out of Houston. That's according to the AP, as Hurricane Beryl did make landfall down there in Texas. Will Wade joining us right now, Bloomberg reporter here in Studio 2. So, Will, the storm has passed, at least the core of this storm here, but there's still always after effects. We still have high winds. We still have flooding issues. Explain what's going on right now.
So the storm is moving through Texas. It's northeast Texas now. It's going to be in Louisiana, Arkansas later tonight. It's going to continue across the U.S., should reach the Great Lakes by Wednesday, Thursday. But today, still a lot of rain in southeast Texas. That's mainly around Houston, which, tends to get a lot of storms.
Yeah. Is Beyonce okay?
I couldn't say. I didn't check on her yet, but I'll do that as soon as I get back.
All right.
Houston is accustomed to being in the eye of many, many storms. It had time to prepare for this. Can you tell us a little bit about its preparedness and the after effects that we should be on the watch out for? I mean, clearly power issues are going to continue to be something that affects the city's residents. Power
is going to be the main issue. You said 2 million. Actually, I checked just before I came over here. It's about 2.7 million homes and businesses in the dark.
Yeah.
It's kind of stabilized there since about lunchtime. It was inching up all through the day.
Yeah.
And Houston is sort of got hit the hardest. About 85% of the city without power right now.
There's been a lot of talk about the frequency of storms and the severity of storms over the last, not just this season, but over the years here. I know the storm wasn't that early, but there was some concern here that this is kind of that harbinger of what particularly these coastal regions are just going to be in for the foreseeable future.
Yeah, absolutely. Yeah. Right. It hit the state as a Category 1 storm, but a week ago it was crossing the Caribbean and it reached Category 5. It was a monster when it slammed into Jamaica.
Yeah.
And the thing is, you don't get storms that big this early in the season, and now we are. And that's really a function of the warming oceans. So the hurricane formation zone that's from the Caribbean east all the way to Africa, that water is warmer now than it usually is. It's like August temperatures right now. And warm water is like rocket fuel for hurricanes.
Absolutely. The Port of Houston, it was shut down during the storm. Is it back up and running? What do we know about the energy infrastructure?
So the port's been shut all day. We heard that yesterday. We have not heard about a whole lot of impact on the oil and gas production. There was one refinery that powered down earlier today, but the storm kind of curved around the coast. We initially thought it was going to go into Mexico, and then it kept tracking north. So I think that because it sort of hugged the coastline, it missed some of the infrastructure. We've seen worse.
We've seen worse, but still a lot of damage done. Will, thank you so much. Will Wade, of course, Bloomberg News reporter covering the latest storm hitting Houston. The maps showing Beryl were pretty incredible.
Yeah.
The 3D maps and just how big that storm was unreal.
It was unreal, and they showed on the screen, of course, on your Bloomberg terminal. You can get all those maps. But it was just, it gets to this idea here, is this what we're going to have to deal with if you live in some of those coastal areas, that these are the types of storms that are just going to become almost routine.
Absolutely.
We're old enough to remember those storms were like once every few years. And now it's like we're getting 2 or 3 of those magnitude of storms making landfall in the U.S.
Does it mean it's going to be that much harder to get insurance in Houston as well, in addition to Florida and California?
Yeah, well, I have some friends who live down in some of those coastal areas, not in Houston, but along the Gulf Coast. And it's almost as bad as Florida right now.
All right, there you go. All right, coming up, we've got the top 3, where we focus in on the top 3 movers and shakers at the center of the day's big stories. This is The Close on Bloomberg. Time now for the top 3, where we name drop the people driving some of the day's most talked about stories. And up first is Giannis Antetokounmpo, the NBA star leading Greece men's basketball team to its first Olympics since 2008. Now, the Milwaukee Bucks star has already won almost every award in the NBA: the championship, the Finals MVP, 2 league MVPs, 8 All-Star appearances. But he now gets to represent his home country for the first time.
Yeah, I mean, this is always sweet, when you see like these guys getting a chance to really represent their country, particularly when it's not the U.S. Because the U.S. we just stack ours stars. With
Dream Team, remember?
Right, but of course over there, I mean, I think this means a little bit more for those countries, those teams, and then to have a big player like him, and obviously it means a lot to him. So
I wonder if he's going to get chosen to carry the Greek flag at the opening ceremonies.
I think they have to, right? I mean, in full disclosure, I don't know who the other Greek athletes are, so maybe they're bigger than him, and I just don't know in the other sports. But yeah, at least for me, it feels like he's probably the biggest Greek athlete I know.
Yeah,
so,
it feels like the
no
obvious
offense
choice.
to any of the other Greek athletes out there. A person I've been keeping an eye on is a guy named Warren Mosler. Now, he may not be a household name, but you've probably heard of modern monetary theory. Of course, Stephanie Kelton was the economist who kind of made that popular, but he is considered the godfather of that. He's actually saying, let's hold off on that. He thinks that spending is getting a little bit out of hand, basically saying that the U.S. is spending like, quote, a drunken sailor. Remember, the whole point of MMT was the idea that because the U.S. dollar is supreme, the government could just kind of continue to do whatever it wants to do without any consequences.
Yeah, but he says perhaps economists missed the point that high interest rate resulted in higher interest income for wealthy people who then continued to keep spending.
Yeah.
So that's another thing.
Yeah.
All right, I'm watching also Doug Burgum, the North Dakota Republican governor, emerging as a VP prospects, charming Donald Trump and GOP donors.
All right. Well, anyone who could charm Donald Trump, I guess that's a big reason why to be on the ticket. Stick with us when we come back. A closer look at the fall of Enron. This is Bloomberg. All right, let's look back at this day in history. July 8th, 2004, the U.S. government unsealed an indictment against former Enron Corp chairman Kenneth Lay. They allege he helped guide a massive conspiracy to deceive investors. It was a slow-moving, but still stunning fall from grace for a company that went from the 7th largest in the U.S. to the largest ever bankruptcy filing, and a stunning fall for grace for a founder and a chairman in Ken Lay, who went from a personal fortune of at least $400 million to being a convicted felon. Or did he? The indictment against Lay claimed that he deceived banks, employees, and Wall Street analysts by concealing billions of dollars in Enron losses. In announcing the indictment, U.S. Deputy Attorney General James Comey, James Comey, said Enron's leaders tried to create the illusion of a thriving company. The indictment, it came 3.5 years after the revelation of alleged financial deceptions that tipped Enron into bankruptcy and fairly or unfairly made Enron synonymous with accounting fraud. It would take another 1.5 years for the trial to even begin and more than 4 months for that testimony to play out. Ultimately, though, it just took 6 days of deliberating for jurors to find Lay and his longtime CEO, Jeffrey Skilling, guilty of fraud, conspiracy, and other charges. A total of 24 people besides Lay were convicted or pleaded guilty in related Enron cases. And that brings us to our question of the day. How much time in prison did Ken Lay serve? Well, it's a trick question. The answer is 0. Less than 2 months after his conviction and 2 months before his sentencing, Lay died of a heart attack at the age of 64. And a weird quirk in federal law meant that his death effectively voided his conviction because he had never had a chance to appeal, as the law allows for. Now, efforts to reinstate the conviction were eventually dropped, as were efforts to claim restitution from Lay's estate, leaving one major and now perpetual loose end in the final chapter of the Enron saga.
Great trip down memory lane there. And it reminds me of what's happening overall right now with the Archegos trial with Bill Huang and the CFO of the fund basically under fire. They, of course, did not make an appearance in the trial, but feels like that whole thing moved very quickly compared to how long Enron took.
Yeah, absolutely. I mean, the Enron thing was so dragged out, and maybe that was because it was such a complicated case. Remember, they really had to figure out what was actually going on there. I mean, there was a legitimate business in Enron. It was just sort of this other side of it that was, let's just
They needed to bring in the forensic accounting.
Absolutely here. Now, Archegos, I don't know. I guess maybe it's a little bit more contained. Maybe that's why it went so fast. I mean, I know the jury is, they're supposed to get the case, tomorrow?
Yes,
is that the case?
They had closing arguments today, and so they'd start deliberating tomorrow. And I talked with a former federal prosecutor who thinks that there's going to be a verdict sometime this week.
This week, that fast? So the jury's like ready to go.
Yeah, well, I mean, basically the government's take on this is it's really quite simple. This guy lost a lot of money, hid a lot of money, was being manipulative. And the defense is saying, it was really complicated, actually, and wanted to bring in all the different financial nuances.
I got you.
And make it so that it's almost incomprehensible to the jury,
Yes.
which is exhausted by this point.
Yeah, absolutely. I know I would be exhausted, Scarlett.
Yeah, they had to go through the 4th of July week as well. All right, let's take a look at how markets closed on the day. Record high here for the S&P 500, the 35th of the year, up 0.1%. But you can see the Mag 7 really didn't do a whole lot. It was a very mixed bag when it comes to those big tech names.
I was kind of curious about this. I mean, look, a record high is a record high. We'll always take it here. But we talk about the idea that these record highs, we started to see that they're much more contained, not just in terms of the breadth, but in terms of the percentage gains on the day, the number of stocks that are participating in that. And you wonder if that can go on. We spoke with Andrew Slimmon earlier in the show to start off the show at 3 p.m. And he actually said it doesn't matter. He thinks that the fundamentals are there for the Mag 7. That's why everyone's buying in them. And he thinks that will help continue the rally. I'm not sure I agree, but he's a lot smarter than I am.
Yeah, but there's a lot of skeptics out there, right?
Yeah.
Mike Wilson of Morgan Stanley just saying today that he thinks it's highly likely we'll get a 10% correction between now and November because of all the uncertainty, whether it's earnings, whether it's the Fed, and whether it's the presidential election.
And you had Scott Rubner, who's more of a tactical specialist over at Goldman, kind of saying something similar, though his was more based on technical factors and the idea here that you have the seasonality in the summer where things go down, and then, of course, with a big election, which a lot of people don't want to be in front of, that might tamp down trading and, as a result, prices.
All right, get ready for a volatile summer then.
Absolutely. Here, we'll be back in a second. This is the close.
Let's focus on entrepreneurship with a company called State Bags. It was created as a for-profit company, but also with the goal of helping kids in the nation's most underfunded neighborhoods. I'm pleased to say joining us now with more is Scot and Jack Tatelman, the co-founders of State Bags, a husband and wife team. Jack, let me start with you because you're both describe yourselves as social entrepreneurs. I know you have a background in fashion, working throughout the pipeline, throughout the global supply chain there. Can you tell me a little bit about your origin story?
My origin story? Well, I like to think that I started working in fashion when I was a tiny little girl. My mom had her clothing store in the basement of our home. But I've worked my way up doing product development and buying for a bunch of different shops. And I actually wasn't even meant to be a part of this. It was first supposed to be Scott's storyline, but then I jumped in and took care of all the product, and now I'm the CEO of the company.
Amazing. Okay, Scott, what?
And I report to her.
That works out well, doesn't it?
I mean, sometimes, not always.
So tell us how you ended up landing on backpacks.
So we ran a nonprofit summer camp for 14 years for kids from Brooklyn and the Bronx. We started seeing a recurring theme, unfortunate theme, of kids coming to camp with all their stuff in ripped trash bags. There was a lot of companies that were doing great work for kids overseas, but our focus was on kids locally. So we wanted to start a company that had a heart, that had a true mission, and that kind of carried the spirit of our camp through into a for-profit business. And we created State Bags, and we did it together, whether that was the plan or not. That's how it ended up. And you know, through a lot of good times in marriage counseling, we made it. Here we are.
Yeah, I don't want to ask you what it's like to work with your spouse. I mean, I love my spouse, but, you know. It's
Not
nice
for the faint of heart.
A separation. But in all seriousness, though, when we talk about that balance between being a for-profit company, but also wanting to do good, I know there are some examples. Tom's comes to mind, maybe Patagonia as well. Was there a company, though, that you tried to model yourself after? Because that just seems like such a hard needle to thread.
A little bit.
Yeah.
We definitely drew inspiration from other companies doing a lot of different, charitably minded things. But the truth is we were kind of doing charitably focused things before we even wanted to start a for-profit company. So our heart and our mission has always been with kids here in the U.S. and serving them through camps, different initiatives that we do now through state. And we were just really proud of the fact that our heart has driven everything that we do, and we like to stay true to that and to ourselves, because once you start mimicking other brands doing other things, then you start feeling like them, and we feel like we've done it completely different and kind of blown it out.
So, Jack, where do you get the bags now? And more importantly, is there an expansion strategy for making these bags available, or is it all going to be just coming through the website, or are you going to have retail partners? What?
We most of our business is through our D2C channel, but we do have a wide variety of retailers that we work with. We're in J. Crew, we're in Bloomingdale's, and we have a ton of different specialty shops around the country. We like to be in that pillar shop in every community so that people can come and see the bags in person, because they're really, you have to see them in person in order to believe that it is a good quality school-ready backpack, because they just look so outrageous.
Yeah.
Can you tell me a little bit about how your product line has changed as technology needs for kids have changed as well over the years? You now see elementary school kids bringing Chromebooks and iPads to school in a way that they weren't 10, 15 years ago.
Yeah, I mean, our bags, they've always had all of the essentials for kids. Like, we've always had a laptop sleeve, and we've always had, you know, the right size water bottle pockets and places for them to put their calculator and their pens and all that sort of stuff. But I would say the bags have, we've had to make them bigger because kids are carrying more stuff than ever. So the product line, we have made all of the bags larger, but this year we're introducing even larger bags for kids, which you can't even believe, like, how much they put in that backpack.
Yeah, no one uses lockers anymore.
It's like sometimes you see those little kids in the backpacks almost down to their ankles.
Yeah, it's true, it's true. But we really like to focus on the size of the child and the appropriate proportions of the bag for that child and what we believe they need. I mean, we're parents, so we kind of know, you know, what they need.
We definitely know.
So the kids are out of school right now, but for parents, it's very much back to school shopping season. I know you've talked about back to school as kind of your Super Bowl. What are you doing for this, your Super Bowl, aside from making the bags a lot bigger?
So we always have a big charitable initiative during back to school, whether it's a virtual tutoring initiative during COVID and many, many other things, donating tens of thousands of bags to Flint, Michigan during the water crisis and many other things. We just finished 3 days ago a brand new nonprofit summer camp that State was the lead sponsor of. We were the directors of in California for the Bay Area's most underfunded communities, called Camp Made for Me. So every kid obviously had a State bag packed with all the essentials that they need for the week and beyond. But it was the first year doing it. It's actually my third time starting a nonprofit summer camp. But this was the first time that State was the lead sponsor, both financially and through product. And it was an incredible week, and we're really proud of it.
I'm curious about the production. I mean, who's doing the design for
this
bags?
one right
So
here?
it's Jack. All right.
And I have
With
a
her
team of incredibly talented designers as well. Yeah.
So, I mean, so what's your goal, like, when you try to come up with a design? I mean, obviously, are you trying to appeal to the kid, or are you trying to appeal to their parent?
Both. I think it's both, for sure. I mean, we love to fuse fashion and functionality. That's a huge piece of what we do. But we go to the ends of the earth to make the most wild bag possible. This year, we have a three-dimensional garden. We have fuzzy hearts. We have fuzzy bouncing basketballs.
Yeah.
I mean, people look at our bags and they're like, I cannot even believe that this is, like, I wish these were around when I was a kid. That's always what people say. But then also the quality and the functionality and everything is always there. So
Where's the manufacturing?
We manufacture in China and Vietnam and the Philippines.
How much oversight do you have, though, in terms of, like, quality control and making sure that you're getting what you're supposed to be getting?
Yep, we have a third-party QC company that we work with, in addition to our agents that are on the ground in both Vietnam and the Philippines.
And Jacqueline and her team go multiple times a year as well.
And we visit as well, and we visit the line to make sure that everything looks good. And we've been working with the same partners for a really long time, so they know the quality that we expect, and they deliver nothing less.
Given the social entrepreneurship angle, the camps and everything, Scott, I wonder who you see as your competitor. Would it be a Tom's, like Romaine mentioned, or is it Herschel, which makes backpacks?
I don't know. From a philanthropic perspective, I think it's just like, I like to listen to the needs of the communities. So I talk to a lot of executive directors of nonprofits, principals, educators, and I hear what's going on in the communities, and I like to kind of act through that. And we've never left a site or a school where we've done a big activation or event where they haven't said to us, families included, saying, I cannot believe that you guys just delivered exactly what you said, even more than that. And so, you know, we like to stay kind of in our lane, and we like to focus on what we do and listening to the families and the kids and the communities that we serve.
All right, great stuff, guys. Going to have to leave it there. Scot and Jacqueline Tatelman, they're the co-founders of State Bags. All right, we need to make a hard pivot from that and turn now to the world of politics. We did hear from President Joe Biden a little bit earlier today, addressing all the criticism about whether he would drop out of the race. Here's what he had to say on MSNBC this morning.
The bottom line here is that we're not going anywhere. I am not going anywhere. I wouldn't be running if I didn't absolutely believe that I am the best candidate to beat Donald Trump in 2024.
And that is the response from President Joe Biden. But still, there are a lot of prominent House Democrats out there privately saying they want Biden to step aside. Joe Mathieu joining us right now, the co-host of Bloomberg's Balance of Power. And Joe, first, let's go through the list of folks who are at least entertaining the idea of whether he should step aside. Are these folks, are they prominent in the party? Or are these just rank and file members?
Well, the answer is yes, as I add one more to the pile here, and that's Adam Smith, Romaine, the ranking Democrat on the Armed Services Committee in the House. This is closer to what we were waiting for, as we've got about 10 now, publicly or privately saying this. And just in the last hour, Adam Smith publicly calling on the president to step aside. He issued a statement saying the president should end his candidacy and should do so as soon as possible to give the new ticket, as he calls it, the maximum amount of time to make its case to the American people. He says the president has not been able to make the case to stay in the race.
Wait a second, Joe. What is the new ticket? Is there a new ticket? Who's going to be on that ticket? I mean, you could say replace. It's like, when everybody wants to kick their favorite quarterback off the football team. Who are you replacing him with?
Well, you're asking the wrong guy. I mean, let's put you in touch with the congressman, because I have no idea. There's a vice president for this reason, Romaine. And now that we're starting to talk about this for real a little bit, people are starting to remember that there's someone named Kamala Harris who's part of this ticket, who shares the delegates and the money. And to blow this whole thing up right now, to bring in a governor or something from across the country and tip over the cart wouldn't look real well if Democrats lost this race. So I think it's less of a question about, what name haven't we heard yet, but whether it's going to be Joe Biden or Kamala Harris taking this to the polls in November.
Meanwhile, you have donors who've given a lot of money to the president's campaign in the past, and so far really feeling kind of powerless because they're not able to do anything. At this point, it all depends on whether President Biden chooses to step down. What are they saying?
Well, look, I think everyone is giving this basically the remainder of this week, knowing that the NATO summit starts here tomorrow. We have heard some concern, including Barry Diller and a few others who made headlines this morning, suggesting that they are not prepared to stand behind Joe Biden as donors. Reed Hastings from Netflix was another one. Rob Reiner even came out and said it's time to stop effing around, in his words. But there's a news conference scheduled for Thursday. Solo news conference. Joe Biden with a sea of reporters and a forest of hands. There's no teleprompter there and no idea necessarily what any of these reporters are going to be asking. Everybody's making a big deal about these interviews. Watch him on Thursday. That's going to be the big test this week. And I think a lot of lawmakers and donors are looking at it that way, too.
All right. Well, hopefully it's during the daytime hours. Joe Mathieu is the co-host of Bloomberg's Balance of Power, airs at the top of the hour right here on Bloomberg. He'll have a full breakdown and analysis here of what to keep an eye on in that race and, of course, the future of Joe Biden's candidacy for re-election. In the meantime, we're going to set you up for what to watch in the markets when we come back after the break. This is Bloomberg.
Fed Chair Jay Powell heads to Capitol Hill for 2 days of testimony, delivering his semi-annual monetary policy report. Bloomberg's Liz McCormick joins us now to discuss. I mean, if the question is going to be when are you going to cut interest rates, he's going to give the same answer he's been giving for a while now. What is it that people are going to press him on? Is it going to be rates, or is it going to be something like capital rules?
Well, I was going to say it's going to be both, and I don't mean to be wishy-washy, but you're going to hear questions on both. There's going to be a lot of pressure, that why aren't you cutting rates sooner? The American people need some help from lower rates. And like you said, when he was in Sintra last week, he said he wouldn't give a date. I think he was asked, will it be September? He's not going to do that, but we have had, since his talk last week, the Friday payrolls data, which is softer. He had already said the labor market is getting more balanced. So he might he kind of lean into that a little bit and sound a little more dovish that we're getting the data, disinflation is going. But he is also going to be asked on the capital rules with, Elizabeth Warren had already sent a letter ahead of the meeting to say, press say that you're talking with, bankers and you're going to scale back the capital requirements, and she doesn't want that. So you're definitely going to hear some questions on that.
In terms of the monetary policy, particularly in an election year, and I'm sure a lot of the members in Congress are going to ask about economic conditions and the pain that their constituents may or may not be feeling here. Is there any way that Powell could even address that without trying to tip his hand on interest rates itself?
Yeah, he's going to try to like be as vague as he can and not give away because he wants the optionality. But like you said, in the political year, there might be some questions on that. Do you want to do it before the election? He's tried to really try to stay out of that. But there is a swarming speculation that maybe September is live. So, you know, we do have August is Jackson Hole. He'll have a chance, but this is be his last chance speaking to Congress before the end of the year.
Before Congress.
So I think he does want to lay out that they've made progress. Inflation is coming down. But
so the only major public appearances, at least the ones that are already scheduled, are basically the 2 Fed meetings coming up.
Correct.
And Jackson Hole.
And Jackson Hole, which Jackson Hole can sometimes be exciting, right?
Every now and then,
yeah, we like that one.
I've never been invited. How is Jackson
I know,
Hole?
we're never invited.
Michael McKee has a mansion out there.
Yeah, well, you know, maybe you can get him to be, you can be his +1 one day. Liz, when was the last time Jay Powell made news at one of these congressional testimonies? I mean, does he ever make news at these events?
Well, no, I think he does. I mean, it depends on what's news to you. Like on the regulatory side, that is like a hot topic for many. So if he kind of doesn't sway away from that, you know, as you know, our DC team has reported, there is kind of talk that they're going to redo the July regulation proposal that came out. If he kind of says again, one time I think he said, it may be kind of revamped totally. Like if he says that again, it looks like, you know, those, you know, the level of capital requirements they wanted may be scaled back. So that will be new, especially to bankers will want to see that. I don't think he's going to give, I mean, the bond market might get something, but they're not going to get any juicy like it's September. But let's see how much he addresses the Friday payrolls. Did that add to his labor market being more balanced? And that shows like they're kind of maybe setting up for, you know, cuts like 2 cuts that the market seems to think right now.
All right, and we'll see how the market reacts to that. Liz Capital McCormick will be all over it. Of course, covers what's going on in the rate space for us here at Bloomberg. A few other things to keep an eye on over the next 24 hours. It could potentially be market moving. We're going to start off with some economic data that comes out at the very ripe time of 6 a.m. Eastern time.
Yeah, this is the NFIB small business optimism. And for the month of June, it is seen inching lower to 90.2 from 90.5. But again, we're keeping an eye on all these metrics that tell us the state of businesses and consumers' mindset here.
Yeah, absolutely. Trying to read the economic tea leaves. Folks also trying to read the political tea leaves. And we know that House Democrats, they have a regularly scheduled meeting for tomorrow. However, this one could be a little bit different because it really will build a gauge of sentiment of how they feel about Joe Biden and his candidacy.
Yeah, as Joe Mathieu was just telling us, more and more of them are now saying out loud that they would prefer if President Biden steps down from the top of the ticket in November. They see the need for another candidate. We'll see if more people join that group. It's a minority right now. But the other thing people are going to be watching is, of course, the NATO summit takes place in Washington. And everyone will be watching for whether Biden looks out of it or is talking to people or if he, you know, flubs in any way.
Yeah, absolutely here. Of course, there's a lot going on in Washington tomorrow that could move the market. We were just talking about it. 10 a.m. tomorrow, Jay Powell begins his first day of 2 days of testimony on the Hill.
Yeah, this time it's to the Senate Banking Committee, and as Liz was just telling us.
Are they the more adult of the 2 chambers of Congress?
It's supposed to be that way.
Supposed to be?
Yeah.
Okay.
Elizabeth Warren will be definitely asking a lot of questions about bank capital rules.
Oh, I'm sure she will be. Also, scheduled at the exact same time, former Fed Chair and current Treasury Secretary Janet Yellen will be testifying over in the House.
I know. Won't it be exciting?
I know.
Which one are you going to listen to?
I know. I mean, maybe you think they'll conflict with each other and we'll have some drama. And if that's not enough for you, we get plenty of Fed speak tomorrow, not on Capitol Hill.
Michael Barr at 9:15 a.m., Michelle Bowman at 1:30 p.m. So plenty of speak and Fed speak to decipher.
Of course, we will have full coverage across all of our shows right here on Bloomberg. So please tune in tomorrow for all your markets coverage. In the meantime, stick around. Balance of Power is coming up next, right here